You know, I was trying to make it more interesting than it is. This is actually an old option trick that I've learned from other option traders. And this is just one of many indicators. Again, guys, I have so many gems and things I use to make life easier. I call them trader hacks. The boys at Tackle say they're Gino gems, but I've picked them up and found them throughout my trading career, and I like them. They work. There's so many, you can't look at all of them every day, but I like this one because I don't know, Tyler and I were talking, and it's one that he uses, and a lot of major option traders and cash flow traders. So what I'm showing you here is I'm showing you the S&P. The S&P right here, SPY. I'm just going to use the ETF here. Very similar. You see this gray box here? That's 1110. See that gray box right there? That's 920. That 890. I'm picking these little swing lows. Now, what's unusual about these little swing lows here? These are market pivots, and you can call them pullbacks or bottoms that I predicted. And that's not really me, it's my indicators. And they're very, very easy to predict, and I'll show you how I did that. Now, you can't predict them all the time, but the majority of the time. And if you can do it the majority of the time, that means the odds are in your favor. So how did I pick these pivots? Now, when I say I picked them, that means when the market was on this red candle right here, or right here, or right here, all these signals, the odds were in my favor to buy on the dip. They were in my favor to do, well, this might be the bottom. Now, I have a 20-day moving average in here. My system, I don't buy anything until it gets over the 20. So even though it says market bottom, I still wait till the market gets over the 20 on directional trading. But my confidence on buying on the dip, because I've used this indicator so many times, and I'll show you what it is this is the S&P, like this one was the last one right here, is there's overextension bands. This is too big of a move. This is going to go up. How do I know? Well, there's one indicator we talked about earlier. Now, this 20-day moving average is just showing you the trend line because it's kind of daring to buy on dips below the 20. And I put the dates on here when the signal came in. Is one thing people use is a Bollinger Band. They come in here and they say, you know what? Let's use the Bollinger Band. And you can see here that anytime the market got below the Bollinger, it was a good time to buy. Now, it didn't get on here. It didn't grow here. It didn't quite cross it here. It did here. So sometimes when the market gets below the Bollinger Band, and it barely did here, and it didn't quite here, it might be a signal that it's overextended to the downside. You might want to play the bounce. But what we do is, I don't use the Bollinger Band on the VIX. A lot of people do. I know that's one thing you can do. So when you're looking at that Bollinger, how do I pick it? How do I pick the signals? You find something that works in relation to this or the inverse. So simply, what does the opposite of the spider? The VIX. You put the VIX on there. Now you'll notice the VIX, when it peaks up here, this is when the market's bottoming on those same dates. But how do you know when it's peaking? That's where you put the Bollinger. You put the Bollinger on the VIX. So I put it on here. You can see, and let me get rid of this little indicator down here so it stands out. You can see here, anytime the VIX is outside the Bollinger, and here it's twice, and right, anytime it closes outside the Bollinger, there's a very high odds that the market's going to reverse. So the VIX is going to close outside the Bollinger more than the S&P. The VIX is going to extend because it's more volatile. And really what it's meaning, if you want to get analytical about it, is option prices shot up. They're buying a lot of protection, and they're getting too expensive to buy. So they reverse their action and they come back. So basically, most of the time, not all the time, when the VIX is outside, here's the last one right here, the market is going to put in a pivot. That's where I do my bull puts. That's where I start to invest in the stocks that I think are bottom fishing. That's where I start to put in my credit spreads. I don't really go directional. And then I wait for a confirmation. Now, right now, with that said, where are we at on the VIX? We are We have not closed outside. I need this to close outside up here before I call it a pivot. So going back so you can see what that looks like, I marked all these on the SPY. Those are how I picked the bottoms, by looking at the S&P. So simply throwing a Bollinger Band on your VIX. That is the Gino Gym. You can see it here. It's been back tested. It works the most of the time. When I say most of the time, I can't say all the time, but a lot, almost the vast, vast majority. The odds are sick how much this works. So there you go, guys. Like this one did not close outside the VIX. That was not a signal. And as soon as it turns red and comes back in, you get your confirmation candle on the S&P. You're good to go. There's your credit spread or whatever strategy. Now you're a bottom fisher, an overextended. You can pick that pivot on a swing low. That's it, Mark. Hope you like that one.
No, that's really fascinating. Will you put that chart back up, Gino? I have a question just for my own personal. Like if I wanted to set those settings in Thinkorswim, like how do I make my chart look like yours?
So simply, all I did is I went to study and I just found, or you can just go in here. You could go in here to the beaker and you could type in VIX or Bollinger. And his Bollinger Band's right here. You double click on it and you don't need to change anything on it. Just leave the basic one there. I'm just going to do it so you can see it here. Hit apply and it'll be on the chart. Now you can change the colors of it and everything you want. But you know what's interesting about this, Mark, is it's one of my major indicators down here in the market internals. See down here? I just leave it on there. On my market internals with the tick and everything. I have it down here. So I'm watching it on a daily chart. And anytime it gets over the top of that Bollinger Band, I keep my eye on it. You know, the gray box I put in there for the visual. But that's it. When it gets a close, you need it to close. It's amazing how many times it predicts. Now, since the VIX is the volatility of the S&P, it works really good on the SPX. If you want to do the NASDAQ, you want to use the NASDAQ VIX. If you want to do the Russell, you use the Russell VIX. But they're very, very similar when they move hand in hand. And what's interesting about this, Mark, is this closed way above the 20-day moving average, but it predicted the pivot right here. You know what I mean? Even in a bullish pullback, it told us it's going to pivot right here, which means you could kind of go, okay, let's play this swing right here. So it just lets you know the market's going to go in a certain direction. And anytime you have an edge on picking market direction ahead of time, it's a huge help on planning your strategies. It really is. Anytime you can predict anything in the market.